All right, this is going to be the ultimate tax breakdown video. So you got to save this. You got to stick around to the end. I dare you. Can you make it to the end of this video? Because you need to know this stuff. Now, I'm going to say I'm not a tax professional, but I am a professor at Berklee College of Music, and I teach music business, so hopefully this helps you out. All right, number one, track all the income you make. All right, this is really important. Even if it's a simple mix and master you do for a client, you need to track that income that you make. Make sure you also keep track of all your business expenses, right? Like microphones, audio plugins. This is all stuff that you can use to deduct, all right? So make sure you keep those receipts, take a picture, store them somewhere. Now, what I use is Notion.ai. It's an amazing organizational website, and I track all my income there, like what kind it is. I keep my receipts, tax write-offs, etc. It's great. All right, so we're going to use this little scenario here to make this as easy as possible. We have Alex. He's a music producer. He makes $30,000 from his W-2 job where he works at a studio, and then $10,000 in freelance. Now let's start with a W-2 job. So Alex's employer is going to withhold money and pay the IRS on his behalf. And then at the end of the year, the employer will send Alex a W-2. Withholding means your employer sends part of each paycheck to the IRS, which is the federal income tax, the state, which is the state income tax, and your FICA, Social Security, Medicare. Now, why withholding is a good idea is that at the end of the year, you're not going to get penalties or get surprises. It's automatic and you don't have to worry about it. And it keeps taxes paid as you earn money. So when Alex was hired, he fills out a W-4 form. Now, this is going to tell the employer whether you're single or married, whether you have dependents like children, and if you want to do extra withholding. Listing dependents could get you child tax credit, and if you want to do extra withholding, this could cover your freelance income and extra. Now let's talk about your FICA taxes. So it's 6.2% for Social Security, 1.45% for Medicare, which equals 7.65% total. Now your employer is going to match you on this, so it's going to be 15.3% total, but you're only going to pay half of that. Now that's going to automatically come out of your paycheck. You don't need to factor this into your withholdings, but just keep in mind this will happen. Now we got to keep in mind there's also tax brackets. So the first 10% bracket is going to cover $0 to $11,600. Then the second bracket is going to be $11,601 to $47,150, which is a 12% bracket. And what's confusing about that is the first $11,600 is going to be taxed at 10%, then the rest of your money is going to be taxed at 12%, so it's progressive. So going by what you're going to make at the end of the year, you could say that, hey, Alex is going to be in the 12%, then there's a 5% for state income tax, so maybe 17% of each paycheck should be held. All right, now let's make this super confusing with self-employment. So remember, Alex also earned $10,000 in freelancing and self-employment. Now, if a client pays you more than $600, they need to send you a 1099 NEC. You're going to use this at the end of the year to fill out your 1040. But keep in mind, anything like Cash App, Zelle, Venmo, those things do need to be tracked. Now, just as a side note, when you track your business expenses, you want to list the exact amount, but on your tax forms, you're expected to round up or round down. So 50 cents or higher, you round up. And this is going to be more for your Schedule C, which we'll talk about later. Now, because no employer is involved, Alex is going to have to pay federal income tax, state income tax, and self-employment tax. Now, unlike a W-2 job, freelancers have to send in money as they earn with a 1040 ES. And a lot of the time, you kind of have to do this on your own or hire a professional. So here's the big kicker with self-employment. You need to pay quarterly. Why? So you avoid penalties at the end of the year. And also avoiding a big sum at the end of the year that you didn't know. And it's also kind of like mimicking a W-2 format. Now, quarter one is going to be January, February, and March, and then the due date is going to be April 15th on quarter one. Quarter two is going to be April and May, and that is due June 15th. Then quarter three is June, July, August, due September 15th. And then September through December is quarter four, and that's due January 15th of next year. Now, you're supposed to estimate what you're going to make by the end of the year. So Alex, estimating that he's going to make $40,000, he's going to use the 12% bracket. So let's say Alex made $2,500 for the first quarter. We're going to multiply that by 12% for that bracket. Even though the $2,500 doesn't fall into that bracket, it's for the end of the year. Now let's talk self-employment tax. So let's say it's $2,500 again. You're going to have to multiply that by 92.35%. Then whatever number is left over there, then you multiply that by 15.3%. Because remember, an employer is not matching you on this. So that's going to be, in this case, roughly $353. For the federal income tax at the 12%, roughly $300. And then for the state income tax, make sure you check what your state is. In Mass, it's 5%. So we go $2,500 times 5%, which is $125. And we got to use a Form 1ES in Mass to send that in. So basically for the quarter, it's about $778 that is paid in taxes. Now let's talk at the end of the year, where Alex was able to deduct $2,000. So remember, Alex made $30,000 at his W-2 job and then $10,000 in freelance, but $2,000 in expenses through microphones, audio plugins, he was able to deduct. So now we're going to be working with $38,000 because we were able to deduct $2,000 for business expenses. Now, as a single filer, you're going to get a standard deduction, so you can minus $14,600 from $38,000, which will be $23,400 on taxable income. Please remember, for marriage, this is completely different. Now remember, 10% for that first bracket, 12% for that second bracket, so basically about $2,500 once you do that math. Now with the self-employment tax calculation, we're going to take $8,000, multiply it by 92.35%, which gives us $7,388, and then you're going to multiply that by the 15.3%. So basically $1,131. Now for the state income tax, make sure to check what your state is. So instead of doing 5% on the $38,000 you made, you can actually deduct things. So right off the bat, you can do $4,400 for a single filer, and then for even paying rent, you're allowed $4,000 deduction, so you get $8,400 that you can deduct. So then $38,000 minus $8,400, you get $29,600. So then it's $29,600 times the 5% of the state income tax, which will be $1,480 in this case. Now you add this all together and you get about $5,187, so let's just say $5,000. So in Alex's W-2 withholdings, he withheld $5,000. In his quarterly payments, he paid $3,000. So if the taxes owed is $5,000, but Alex paid $8,000, he's going to get a $3,000 refund. So Alex is all set. No penalties, nothing to worry about, nothing owed. Now to put this all together, at the end of the year, you're going to use a 1040 form as basically your master form. This is basically the main form. You're going to attach a Schedule C for your business expenses, and it reports your freelance income. You're going to attach a Schedule SC for your self-employment tax, which remember is that 15.3%. You're going to enter your W-2 info, which your employer will give you at the end of the year, which summarizes what you made and what you withheld. And then for the state income tax, it's going to be a separate form, which in mass is a Form 1. Then you can file it, you can use TurboTax, but honestly, at the end of the day, guys, use a tax professional. So if you made it this far, you are an absolute trooper. At the end of the day, I just recommend getting a tax professional, unless you have a simple W-2 situation, but if you do freelance, you definitely need a tax professional. Track all your business expenses, keep records of all the income you make, and you're going to be good at the end of the year. Definitely follow for more music business stuff. Take care, everybody.